Hey, I did a couple of videos that touched on contraction drawdowns during bear markets. I just wanted to do a more focused video and talk about the Great Depression again because I did a video earlier mentioning that my model is following the Great Depression's blow-off top, and it is not. Actually, once I've gone back and looked at this, this is Brian Lewis with MMT Investing, and things just changed. So, so when we're looking at drawdowns in a bear market, really the only example that we have on the S&P is the backside of the housing bubble. So we have two contractions in a row here at the bottom of the financial crisis, right? So we get our credit contraction drawdown, and then we get our bull trap bounce, and then we get our late bounce here, and then there's a second drawdown cycle immediately afterwards, and this is a weird one. We get a drawdown and a bounce, and then a low bounce. Um, so, I don't know. I don't know if any of these are exactly good models for what I have projected, because I mean here you have like an insane waterfall, and then a super low bounce, and then a bounce up. I mean that's definitely not what I have projected. And then here you have the time is super contracted on this one. You get like a draw and a bounce quick, and then you get a late crash. Um, but this kind of sideways bounce in the middle is what I have projected here. So maybe other than the timing of this one being weird, um, this might be the closest bear market drawdown to what I have drawn up. I don't, the S&P doesn't go back to the Great Depression, and you can't really find a candlestick kind of chart like this on the Great Depression. You just get like very rough, angular lines. But you can get a month by month angular line on the Great Depression, to try to use that blow off top, because that's the only blow off top I can find that is like this kind of quad four money contraction drawdown right off the top. But uh, let's see. Here we go. Okay, so this is our crash, and the here's the drawdown. 1 month drawdown, 1 month bounce sideways is what I have projected, and then another bounce down there, right? So that looks similar to that second one I looked at a second ago, where it's down, sideways, down. But if you go look at the Great Depression, it is down, 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 like three downs, um, almost identical, length downs, like straight down, 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 down. So let me just draw on here. If this were to look like the Great Depression, what it would actually look like is, and it would still be a 1 month time frame. It would be down and then down. That would be a Great Depression style drawdown. Okay, and that would be, oh my goodness. So yeah, so here's our drawdown. Um, yeah, so we do a dead cat back test up here on the 2018 bubble bottom. Then we go and we run across to a bull trap and backtest the bottom of the financial crisis bull market trend line here, right? And then for this to model the Great Depression, after that, we need almost equal sized downs twice. So this would be a down to the top of the financial crisis, at the top of the dot-com. They're almost the same height. This trend line cuts right through those. That's a really low target that I was not really considering earlier, but now that I'm considering the Great Depression graph against this one, I'm considering this as a possibility now. So we could have a ripping down to the top and then a ripping down again to the bottom of the financial crisis here. I do actually think that is possible now that I've looked at the back of the financial crisis. Because if we come over here to the financial crisis, like this is a big waterfall drawdown. So I mean this is a big one here, but the Great Depression was 3 pretty equal sized moves. So I don't know if the Great Depression had a first move this huge though. I mean this is I don't know. It's just hard to get perspective because the drawdowns on the way up in a bull market just aren't that big, and then they look huge on the backside. You get like these huge waterfall drawdowns when you're in a bear market. So I don't really have the proportions quite correct, but from this starting point, if I was to map the closest thing to the Great Depression onto this, it would be 3 roughly equal length downs, and that would be top of the dot-com, bottom of the financial crisis. Boom. That would be what the Great Depression looks like here. Please smash the like button and maybe subscribe. This is not financial advice. Happy trading.